brightness of this PC. There we go, it is a little bit better now. So here we have the brand oil on pocket option. So we will be using the black box with ICT's concept to try to profit from this market. Okay, so first let us go to the tournaments tab, because that is where we will be using for trading, okay, today. And you'll appreciate how much this commodities brand oil, it is Samania, I mean 80. Let us zoom out of this. This is a 1 minute chart. So we will be using 1 minute. Then so as you can see here, let me use let us draw a Fibonacci and determine our TP2 first. Okay, that's the most important thing first. So we need to identify black box first. So this one candle overlapped with this one, then the third candle overlapped with this one. That's a good thing. That makes it a black box. So since price is pumping the upside, we will be drawing our Fibonacci from, will be projecting our Fibonacci like this. So our TP2 will be up there. So you can see where price is trying to reach. Okay. So in order to identify that, we'll be placing horizontal lines here. So you can see. So price is gravitating toward the TP2 up there, okay? Toward that take profit 2 up there, okay? As you can see, I have used the bodies, not the wicks. The wicks won't give you an accurate projection, an accurate take profit, but the bodies will, okay? So now we go to the lower time frames. As you can see here, we have the 1 minute. We go to 1/4 of the higher time frame you have used. 1/4 of 1 minute is 15 minutes. So what happened here? So our black box is from down there to up there, right? On the higher time frames, on the 1 minute. But on the 15-second, you don't really see it. It's from up there to down there. What really happened? So we had a swing low taken, broken the downside, that is qualified as a sweep. I don't think that is a change in character. That is a sweep of liquidity down there. Okay. So what they are trying to do here is most likely an OTE, okay, optimal trade entry. So they are trying to come to the discount down there. It's down there. So we use a Fibonacci here. Let's plus Fibonacci. A little bit messy, but this is what it is. So I will be placing from the lower swing, including the wicks, because I'm determining premium and discount. So this is 50% and below is discount, and 50% and above is premium. Since we are looking for higher prices and our target is up there, including this high also, that qualifies as a good entry. So I have now a structure shift. The swing have broken to the upside right there, and we have traded to a discount, which is below that on the discount array. So in the discount array, you need to find an imbalance like this, or an order block, an imbalance or an order block. So in this case, we have reacted of an imbalance here. So if price now taps this zone, this imbalance right there, I will be long. Okay, so price is coming. I'll be determining the expiration time. I had to select 3 minutes and $10. So I will be buying this. Okay, I have bought this, right? So this is the area that I think price will find a support. Okay, we can use a rectangle. Where is it? It is up there. So this rectangle will be drawn on this God. As you can see, this is an imbalance, the imbalance that this denotes the imbalance here. So all I am seeing is the bodies, not the wick, the bodies, right? What are they trying to do? Where are the bodies? The wicks can do the damage, but the bodies will respect the array, okay? So as you can see, so I didn't draw it properly. So we will use these candles high. That the last bearish candle down there, and this bearish candles low too. As you can see, where did the body stop? Look at the bodies. Look at the bodies. That is crazy. That is crazy. You cannot get any precise than this. That's precision right there. It's nice. It is nice. So even though your stop can be down there, the wicks could still overshoot your area. It could be the imbalance, it could be an order block, it could be a liquidity void. Okay, so as you can see, price is gravitating towards the our TP up there. Look at that. This high, the first one is this high. They took that one. They took that high right there, I think. Oh, didn't say. I think they made equal highs. They didn't take the highs yet. So they are trying to build an idea that that place is resistance. So everyone is selling, who is selling up there will put their stop up there. They are placing their stop up there, right? Because if you are selling, you put your stop above the swing highs. If you are buying, you put your stop loss at below the swing loss. That's what's happening here. So now, so everyone putting their stop loss up there and selling the downside. Why? Because price once tried to go up but failed and went down. Then previously it tried and then went down. So this is a good supply zone, right? This is a good supply zone. As you can see, this was a demand zone before. Pump, right? Then price came down. Then found a resistance, then dumped. Another resistance, then dumped. So this is a good supply zone, right there. Just like it. Look. So everyone is selling up there, but we are not. In fact, right there was another buy opportunity that I missed. Right there was a buy opportunity. Let me extend this rectangle box. So you can see, they came down one more time, cleaned the lows, and now shooting for the highs, trying to clean the highs now, right? So another trick for the sellers, for the retail traders, that it is a strong resistance. As you can see, price is rejecting. Price is rejecting. It is going down. So you sell, sell there, and sell there. Sell everywhere. Right there. Sell it, sell. Put your stop up. A lot of money, a lot of pool of liquidity is what accumulating. As you can see, price is now in a range. In a range. What are they doing? They are accumulating their longs. Smart money is accumulating longs. Notice they made the swing low here. Did they break the swing low? No. No, they didn't. Look. They are interested in the buys. In the buy side. They took one here, two here. Look. Look at that. Exactly TP right there. Hit. TP2 is that one. That one is TP2. This is our take profit here. Look at that. Snagged it. They snagged it. What is next? Next is this high. This buy side. Right there. What is next? Next is this. This imbalance here. This needs to be filled. Right? So after TP, last TP has been hit. Look what is happening here. So your take profit should be there, right there at TP2, right? So you had a lot of buying opportunities, right? A lot of buying opportunities from down there, from liquidity grab, Two, this swing high broken, which makes it a change in character. Then we used what? The OTE, right? The optimal trade entry down there. Price came to 0.5. How did you measure that? I used a dealing range. What's the dealing range? When price takes a swing high like this one, boom. Then when price takes a swing low down there, boom. This run right here is your dealing range. You see? That's your dealing range. Then you wait for price to retract to come down to below the discount. Below the discount. Usually it is better if price touches this 61.8 retracement of the fib, but 50% halfway is also, it is not bad. It is not bad, right? So price came down, and then what happened? We reacted. We pumped. Right there. We moved up. Okay? After moving up, did we continue moving up? No. There has to be a hunt. There has to be a liquidity hunt before moving up or down. Look, down there. There was a hunt. Before what? Before the hunt, they placed a spot for sellers to enter. They invited sellers to enter up there. Okay? Then they made it seem that the price is collapsing, encouraging more sellers to enter. Nice play, huh? Encouraging more sellers to enter. Then, when new buyers who are buyers who were faked by this bullish run who bought down there are now trapped. Why? Because the price now came back on them. They were in profit, but the price came back on them. They are squeezed now. They are squeezed. They are losing money. They are sweating. Finally, it hit their stops here. So, buyers are out. Who is the only buyer now? Who is the only buyer now? The smart man. The smart money is only one who is buying down there. There are a lot of sellers, but no buyers. Why? The buyers are out here. The buyers who were buying before, who were correct before, now they are wrong. They are out. Only buyers are the smart money now. They took all the liquidity here. The liquidity pool is gone. It is gone. So if there are a lot of sellers but no buyers, the smart money is gonna use that to fuel an upward move, right? The real move. This is the real move here. This is the real move. You don't see any other move. This is a bullish run here. As you can see, typical. Even though it is choppy, it is a good typical run. So as you can see, price made higher highs and higher highs, higher lows, higher highs, and higher lows, and higher highs, right? So price kept pressing higher. Squeezing sellers. Buyers are already out. Alright, now they are attacking the sellers. The sellers who are short up there, thinking the price is going down. Why? Because it was bearish, as you can see. So now they are out. If there are people who are trailing their stop up there, now it will return back down. I will just have to just move it a little bit up, and then they think it is gonna go down. When it is going in their direction, they think that it will continue dropping. No. The smart money has another idea. The price just kept pressing higher, squeezing shorts. Shorts who are still up there. Now they are in danger. They came for them too. While they do that, they are generating what? Sell side liquidity. Look at that. This is for another time. This is for another time. After a change of character happens, they will snatch those buy side liquidities too. Sell side liquidities too. But when we are bullish, we are attacking the highs, the swing highs. So every seller is in trouble. Every seller who trailed their stop up there at the swing highs, they are in trouble. So rather when price pressed up, I just told you that. I was positive they were gonna break that high, but they didn't. What did they do? They are smarter. They sold an idea that that area is strong resistance. Okay, that area up there is a strong resistance, right? So they made it seem like that the price is going down. So there will be what? New sellers. New sellers will be coming into the market. They will flood the market. Even so, they are not on Brent oil, which is OTC. Since market structure is the same, what I'm talking here right now works on all markets. On gold, on Bitcoin, on euro dollar, pound dollar, the currencies, Nasdaq, ES, all of them. All of them obey this because this is profitable for them, for the minorities, for the smart money. So they will use this scenario, this narrative, to trick people into investing, into pouring their money into what they think is right. Okay, they think they are right, so they think they come here to make money, right? They come here to make money. Their hard-earned money is poured here. Of course, they might not be targeting the retails who are placing a $50 stop, but there are hedge funds. There are hedge funds, organizations with big money who are still trading support and resistance, who still think in terms of trend lines. Okay, in terms of trend lines. Trend lines are also liquidity traps. I showed you in my previous episodes that they are used as traps. The price will just pop a little bit and then collapse, right? So this was a narrative that made me get long right there. I guess, where was it? It is around there. Yeah. Coupled with this liquidity being taken, that was a nice piece of cake. It was a piece of cake for me, right? It's nice. And we had a swing high up there, broken. Then we had a retracement again to the optimal trading tree, which is 71 point, yeah, 78.6 is one down there. So right there could be your another buy. Your other buy could be there. Your first buy is this one, and then this one could be your buy too. So there was a lot of buy opportunities from there to there, and then the third time price retraced, and then hitting an order block down there, and then we had this, and then that's it. For this range, that's it. Okay, until TP2 is hit, take profit 2 is, I'll be using this ranges price action. After that I will be finding another black box. Okay, for this black box the take profit is hit, so I'm not gonna do anything. So based on this scenario, we will be entering another trade. Okay, let's delete this, we don't really need this one. Alright, clean. So as always, we will go to the higher time frames first. This is a 15-second chart, as you can see. 15 second. So we'll go to the 1 minute time frame. That is where I find my black box, okay, and my take profit beforehand. Look at this nasty price action. Price could just moved with one single candle, but it said no. Why? Because this sells an idea that this promotes a lot of liquidities here. Buyers and sellers, trend line traders and resistance and support traders. All of them, when price trades in a range, there will be a lot of liquidity pulled up. A lot of liquidity pulls. Okay. So that is why they do this. It is to generate liquidity. It's simple. It is easy. So let us zoom out on this. Yep, okay. Yeah, let's do this. Nice. This is it. Price just dumped as always, because as I told you, liquidity has to be absorbed. So they just absorbed this one. The buy sides were continuously being cleaned to the upside, so now it is time for the sell side. So the sell side is gone too. Now the reason I came down here is to find the black box. Okay, right there it is. We are cooking one black box here. I want this candle to trade down. If it does not trade down, there is no black box. I'm sorry. Alright, I am sorry, there will be no black box if it does not trade down. I want it to overlap with these two candles, previous two candles. Otherwise there is no black box here. I'm just waiting. If there is no black box, there is no black box. There's nothing to do, because it is the basis of all. It is the basis. It is used as take profit. It is used as a market structure, as a support, as a resistance. It is the basis. Okay, so we need this candle head down. Nice, done. The black box has now officially formed. So now we'll pull our fib, then pull it down there, and so we'll use the bodies. As you can see, I'm using the bodies, not the wicks, to determine my TP2. So seems like my TP2 is up there as the premium area, and inside that imbalance right there. That is perfect, and below that order block. So I'll be going to the lower time frames before the trade finishes, or the trade or I miss it, before I miss the move. So already a bullish move is unfolding. Look at that. We could have been a buyer down there, right? If I see one more pullback into the optimal trading tree, I would be buying. Otherwise I cannot rush and enter on the this huge move as you can see unfolding. So their target there is of course this equal highs as you can see it here. Look at that, those equal highs. And of course we have an imbalance up here on the 1 minute. This is a 15-second time frame. You can't see anything here. You would see an order block, but on the 1 minute there is an imbalance. There is a gap that needs to be filled, so they are going up there to touch it. On extremes, I would be looking for these smooth stops. As you can see, they are very, very smooth. Look at that. They are equal. And that is a target, a number one target for the algorithm. Right? That is a number one target. You'll be going straight there, running it. So I don't know if it's gonna be a sweep or a liquidity run. I don't know, but I might have to wait and see. So the trade was gone down there. When you so I see some kind of retracement here. Since TP2 is up there, I still think that they are still bullish. There is no market structure shift on the 15-second. There is no change of character. Still we are retracing a pullback. So a pullback doesn't mean we are changing trend, right? There is no trend change. Oh, okay. So I want the price to touch that lower part of the imbalance. So I'll be long. As you can see, I bought for 3 minutes of $10. So I bought that one as it down there, trusting this pause liquidity voids and this imbalance would support the price higher. Okay. So as ICT says, when two or more imbalances are present, expect the price to trade to the second one. Okay, so here we see price just disrespecting the imbalances here, right? Maybe we are trying to clean these lows, clean the lows, and then after that just with a change of character. After seeing a change of character, I would be interested in buying. As you can see here, we have a swing high. If we push the upside, I'll be looking for this swing high as a determinant for a change of character to unfold. Okay. All right. I guess price is just melting. Price is just melting. There is no change of character up there on the 15-second. I don't see any change of character there. There was a run, a sweep, but after that we had no swing low or no nothing. We didn't break nothing. Maybe on the 5-second, maybe there could be something, but I don't see it here. So let's see what they want to do here. Okay, I see a swing high being formed there, and we have a liquidity run. So this swing low being broken to the downside by this candle. So let's see what they want to do. They are now on extreme discount, very, very extreme, based off of this dealing range. From up there to down there, they are in extreme discount. So you use this swing low they took this swing low, and then they took this swing high. So this is the dealing range here, right? Yeah. There is no sign of change of character. Still break of structure to the downside. Is they are still breaking it. They are still breaking it. Equal lows here, relatively equal lows, purged down there as you can see. Maybe there something could happen, but the dealing range is now gone. It is gone. So here we have a swing high. Let me zoom in on this one. Yep, I would be using this one as this is more prominent. Swing high broken. There was a hand liquidity and down there. Okay, so that could be used as an entry using okay, let's wait. Let's just wait and see what the price is trying to do. Okay, yeah, we should have respected this range here if we were yeah, we should have bounced off this discount here, this liquidity void, using this one, filling this one, and then after that this should have been a bullish candle and continue trading higher. But here what happened here is, of course, we had an entry here down there with this swing high broken to the upside, with this swing low broken, so this makes this a dealing range. And then using a Fibonacci, you'd see that it traded below the 50% and traded inside of a gap, right? So that could have been a buy, your buy, targeting TP2, which is up there, right? That imbalance that I told you on the 1 minute, this one. But just like I talked about this in the previous episode, you can see episode 1 and episode 2, price could come really close to your TP, as you can see, then just go all the way down to the other direction, as you can see it. So I will be targeting TP2 on the downside. Okay, so we'll go to the 1 minute time frame and then determine our TP. As you can see, just price changed gears to the downside. Alright, so this is our entry for a buy. So you trailed your stop and then you took your partial, just like I talked in the previous episode. So nobody cares. When that thing collapsed, there should have been some kind of market structure shift or something, right, on the lower time frame. But on the 15 minute, there is nothing. I'm sorry, on the 15 second, there is nothing. Look at that. There is no shift in market structure. You could use inverted fair value gaps, but we cannot use that unless we see a structure shift. There has to be a change of character. Do you see any swing low? I really don't see any swing low. I don't see any swing lows up there. Something happened up there. It may be on the 5 seconds, it may be on the... Let us turn off this. Maybe auto scroll. I have to turn that off. So something has happened. Something has happened up there. Let's go to the 5 seconds. Of course, on the lower time frames, the lower you go, the more structures you would see, and you would be confused. So it is not advisable to go to very, very low in the time frames because you will be confused really. So there was a swing low, I see. The swing low was broken hard with displacement. Of course there was gaps, but it was in a hurry. They displaced and then they came back again over and they hit this order block here, as you can see. This is an order block that led to the structure breakdown there. Okay, and then made a candle that has a gap, an imbalance, that has an imbalance. Okay, a candle that has an imbalance. So that is your sell on the 5 seconds time frame. That is your sell. Of course our target will be TP2, which is down there. It's huge. It is huge. Your stop loss up there, entry down there, then TP2 is down there, almost 1278, something like that. Still price is dumping, as you can see. Yeah, on the 5 second you could see that there was a structure break, change of character, so downside and a trade up. So that's your entry based off. Of course there was a fair value gap and there was a liquidity void that was filled. That makes this what? An intermediate term. It should not be broken to the upside. This cannot be broken to the upside. If it fills a fair value gap, okay. Fair value gap is filled with a swing high. That swing high is an intermediate term high, which makes it a protected high. Okay. That makes that high what? A long term high. Why? It has a short term high to the left. It has a short term high to the right. You got it? So that's long term high, which is protected. Price didn't even try to reach up there. So when this structure is broken, there will be a disturbance, a huge disturbance in the price. Continue. So on the 10 seconds time frame there was nothing, so that is crazy. If there is nothing, so there's nothing we can do too. So as you can see, if that was a swing low, then we would have used this breakout structure. Of course these are lows, equal lows, then they were broken and there was a trade up into this order block. This order block is responsible for this break of this swing lows. Okay, so that could have been our entry sale. Okay, but that little noise, that much, it is very difficult to identify them. Okay, It is very difficult. That's on the 10 seconds time frame. Let's get back to the 15 second and see what we have over here. So TP2 is already hit. So let me show you what happened. As you can see, this is a nice run targeting these lows, and of course after that loss you would be targeting TP2, which is around there. That is double your first target here, entering up there. So next time would be doing this. So let's go to the 1 minute time frame and show you that our TP was actually hit. So this was our initial target, the upside. This was our initial target, targeting these highs, equal highs, and then the gap there. That's what really happened. We went really close, we hit an order block, and then we just collapsed it. Right? Then the thing that I didn't see is this loss. That is crazy. This equal loss down there. This equal loss have been the target all the time, bro. It's crazy. The price just went, when you measure from up there to down there, optimal trading tree up there. So after that, just price collapse. Okay. So it is better to see where we are in close proximity with the black box. Where are we? So we are in a dealing range. This high broke this swing high, this low broke this swing low, right? So this makes this a dealing range. So price came up there, came to the premium. So all they were doing was offering algorithm was offering premium price up there. So smart money was selling while we were buying, right? Our first buy was down there, just like I told you. Bam! It's an entry into the premium area. Okay, not really TP2. We didn't hit TP2. We could hit TP2. That would be a deep premium, but they said nah. Most of the time, price just hits the 50% or the 61.8% and then melts. That's what's happened here. So knowing where you are in close proximity with the black box really helps. As you can see right there, we could have caught a sell down there and TP2 to down there. Okay, we learned a very important lesson here, a very important lesson here. So that is that, and let me reverse this and show you that we actually TP2, and at exactly TP2, I'm telling you, you would see a reaction, a pullback or something else. And look at that. That is our target. And look at that. Look at this candle. After hitting that TP, boom, it pumped to the upside. We are getting the most out, the most. Okay, if you don't want to do that, you could use these ranges. TP also, right? This is also ICT, also uses these two. So you can use this, as you can see here. This one has a better reward, but you would have to wait for the until the price comes back, retests and hits again one more time. So as you can see, this one has a better risk to reward. And then finally price what? Changed character. We are now bullish. We changed character. We were making lower lows. Now we are making higher highs. So it's easy, just easy. So beautiful, beautiful, beautiful thing here. Beautiful right there. So our first buy down there, our first sale up there. And look at that, where we get out. That is nasty. That is crazy. So thank you for watching. This is almost 1 hour long video. So next time we will see about other things too. Okay. So for now, it is an hour long video, and they don't want that. I know. Nobody wants a long video. So I'll see you in the next one. Okay.